no one really knows what the market's going to do. Now, let me take a moment to define that a little bit, because that may seemingly fly in the face of everything we've just been talking about, right? But it's the difference between looking at a track record, the evidence, versus a forecast or a prediction. That's the part that you really don't put much stock in. You think about it, and I've said this in client meeting rooms, that, no disrespect to economists who are out there. I think they're great, intelligent human beings, but economists are kind of like meteorologists. They're wrong half the time, right? But they'll keep their job because, I'm not saying that they don't have the right data in front of them. They're not smart, but it's just hard to predict what's going to happen in the market. If you take a look at just a few of the year-end predictions at the end of 2021 that were made about 2022, Barclays, the S&P was going to end the year at 4,800. Bank of America, 4,600. BMO at 5,300. You can look at the dates. I don't think they're on that graphic, but the dates that these predictions were made, they were all late 2021. Go on down the list. Some are over 5,000. Most are over 5,000. Morgan Stanley's Michael Wilson was one of the lower ones at 4,400. The reality, though, is the S&P 500 ended 2022 at 3839.5. You see that on the gold line at the end of that graph. The bottom line is everybody was wrong.
Guys, if you're playing the Price is Right, where you have to get as close as you possibly can without going over, every single one of them lost.
Yep.
And you hear that sounder that goes, wah, wah.
Yeah.
Right.
And no, we don't know from 1 month to the next, or really 1 year to the next, what the market is going to do. But we can get very, very specific on how the market has behaved the longer you draw out the time frame. And we know, again, going back to that chart that we looked at a little bit ago, 15 years is kind of the magic number of having almost a 100% track record of the market performing positive all the time. And so clearly, when you think about your investments, if you're sitting at 60 years old today, are you going to be around at 75? Probably so. Do you hope to be around at 75? Are you going to plan to be around at 75? Probably so. Here's the other question. Are you going to need more income at 75 than you do right now at 60 because of inflation? Absolutely so. So you've got to have a way of outpacing inflation, and equities give you that opportunity to do that.